The US president says he's going to take off 18 cents of federal tax off a gallon of gasoline and says that could lead to a buck or more of declines in the price of said gasoline. I don't know what I'm talking about 92% of the time, but I just don't understand how 18 cents can equal over a dollar. Do you understand?
No, and neither does he. And good morning. This is it's not going to have much of an impact. If you are a 50-gallon consumer over the next 3 months, you're going to save some like $10 on your fuel bill. Is that going to increase or make any relief? Not at all. And all the talk of a tax cut reducing prices, if anything, it may prolong the pain, because it's not going to cut demand if the price comes down a little bit. So I don't see where he's getting those numbers for. The price will remain elevated for the foreseeable future, simply because the market is as tight as it is. The call for investments is not going to wash either, because this is driven by multiple reasons. We all know them. What does the future hold for energy demand with the green transformation and so on? Investment projects takes years before they start to become profitable, and it's just simply this catch-22 that we're caught in right now.
Okay, so I'm not going to drum home the point too much more, but both you, an industry expert, and me, who's looked at the industry for over 3 decades, don't understand how 18 cents can equal over a dollar. We'll move on from that then. Where's the oil price going, Ole?
It's going to be range-bound now for the near future, because we are obviously seeing a shift in the sentiment on the focus in the commodity space from tight supply to these recession fears that's coming through, and has been coming through since the high inflation print that we saw from the US earlier this month. Since then, we've seen quite dramatic drops in across the space, led by energy and metals. But I think the underlying demand is still there. It's not going to drop to the point that we get a more balanced market. So I'll keep a very close eye on these refinery margins, because that's really where the pain is, and that's also really where we get the stories. So can we get it back to $100 in Brent, the recent lows? Potentially yes, but generally over time, this market, it needs to stay high in order to ensure that demand doesn't start to pick up again, or at least that we get some more balance in the market.
Ole, you put out a very interesting tweet this morning pointing out that 5 of the leading miners have now lost around 27% of their market cap since their April peak. Fascinating numbers, and it obviously includes the majors like BHP and Rio and so on and so forth. Where are they going from here on in? Because we've obviously seen them respond to both the action of the Fed and the lackluster efforts to stimulate the Chinese economy we've seen so far from Beijing. So what does your playbook look like from here on in? Further downside for these 5 miners, or do they steady here, or do they turn upwards?
I think they will steady fairly soon. As I also wrote in the tweet, obviously the 2 reasons that we all focus on is China lockdowns, which will be temporary and which will be met some kind of, there will be a counter move once those are lifted. The problem right now is that we thought they would have been lifted by now, and now we are looking for a few months ahead. And then obviously the recession fears, which is gripping the markets. But I think in addition to this, we've been through a horrible time in the stock market now for the past couple of months. And if you had the position left where there was any profit to be made or to be booked, then that probably has been booked. So I think that added to the downside pressure. But we have to keep in mind that these companies, they will make a truckload of money over the coming years, and they will continue to do so. The green transformation, the demand for metals in general, I think it's not going to fall off a cliff, and we're seeing these as buying opportunities.